Hi, and welcome to today's webinar on increasing your retirement confidence. My name is Mary Stork, and I am the Senior Vice President, General Manager of USAA's Retirement Solutions. And I'm really excited to be here with you today. I have been at USAA for about 17 years and have held a variety of different roles, but most of those roles have been very focused in financial advice and financial planning, helping our members achieve their retirement dreams. So this is a topic that's near and dear to my heart. I'm joined today by a few of my wonderful colleagues that I'd like to take a moment to introduce you to. April Simones is one of our retirement income managers and leads a team of retirement income specialists. She began her career with USAA as a summer intern in 2012. Dale Folsom is one of those retirement income specialists here at USAA, and he serves members by helping them develop and execute their retirement income strategy to achieve financial security. He joined USAA in November of 2009 and previously served as a manager and a wealth advisor. Thomas Sovereign has been with USAA for 6 years, and as a product management director, he is responsible for new product development and supports USAA's annuity offerings. Thomas is proud to have a father and a grandfather that both served and combined have over 100 years of USAA membership. Okay, before we begin, I'm going to cover some housekeeping items. First, we're going to email the link to this recording to everyone who registered. So you'll get a chance to come back and look at it again or review it again if you want to look at some of the topics again or hear some of them again. We're going to speak for about 25 minutes, and then we're going to move into Q&A. Please use the Q&A function in Zoom to submit your questions at any time during the webinar. We have specialists that are monitoring the Q&A who will try to answer every single question. And if you get an answer that includes a message to call us, it's typically because the answer requires some information that we would rather and feel would be more appropriate to deliver over the phone. Please don't include any personal or sensitive information in your questions. We're the only ones that can see it. Your questions will not be displayed to the entire audience, but we still want to make sure that you don't have any personal or sensitive information in there. Okay, now let's get to the topic at hand. Today's webinar is all about helping our members understand more about annuities. We're going to start by reviewing some retirement trends and then talk about what an annuity is. And then finally, we're going to cover the biggest and most frequent questions that we receive about annuities. Many of those may be ones that you already have on your mind. We're excited to share all of this great content with you. The webinar slides are, again, going to be available to download in the resources tab of your Zoom bar. And like I mentioned earlier, we're going to send the recording of this webinar through email to all of you. Okay, before we start learning about annuities, we'd like to give you a sneak peek behind the curtains into one of our most important USAA traditions, and that's our mission moment. We start most meetings with a mission moment. And I will tell you that having been at USAA for 17 years, our mission is very special to each and every one of us as employees. Many of us, I would venture to guess almost all of us, can recite the mission. The mission moments at the beginning of meetings help us connect with a personal connection to our mission and remind us why we're here, who we're here to serve, and what we're here to do for our members. So let's hear from one of our own and give you a sneak peek into this tradition here. I'm going to hand it over to Dale to share his mission moment with you.
Thank you so much, Mary. I appreciate that warm introduction. About 5 years ago, I started working with a couple in their early 60s. We'll call them Mr. and Mrs. K, and they were living in California. Mrs. K called because her husband was about to retire from a large computer company after working there for about 35 years. They were looking for retirement advice. I conducted a financial assessment and I learned more about them. And I discovered that she was a retired teacher and they intended to move to New Mexico after his retirement. I learned they wanted to be conservative in their investments, but they were in fact somewhat aggressive. I also noticed their life insurance policies at USAA would be expiring pretty soon, so I took them to a life insurance rep to be sure that that wouldn't happen. He didn't have a pension with his company, but her pension combined with their Social Security was going to be plenty enough to pay the bills after he retired. They decided to move their 401k here to USAA because it had been invested in the stock market and they wanted safety and they wanted their money to be consolidated at one company. I hear that a lot these days. As a result, I started a 10-year savings annuity for them so they could draw it at their leisure. 2 months after he retired at age 65, he was diagnosed with bone cancer. He was given perhaps 5 to 15 years to live, and we set up a couple of income annuities to give them some additional stable income so they could travel and enjoy their remaining time together. Unfortunately, time was a bit shorter than everybody thought, and he passed away 9 months later, 9 months after he retired. So Mrs. K had really depended on him to do a lot of things. She didn't drive. She didn't really know how to pay bills. She didn't even have a credit card in her own name. So I assisted her with the financial impacts of her husband's death. She had lost a portion of his Social Security when he died, and the annuities transferred over into her name, and they continued to provide her with monthly income. Thankfully, the life insurance policy had remained in force and it paid out, and that enabled her to sell their California home. And then she moved to Virginia to be near her daughter. That was 3 years ago, and we continue to speak from time to time just to make sure that she's doing okay. I check in with her from now and then, or now and then. She's told me many times that losing her husband was the hardest thing that she's ever experienced, but she's also told me that she's doing fine now from a financial perspective because of the income annuities that we helped her set up before her husband's death. They still provide her with monthly income, and that's going to continue for the rest of her life. She's also very comforted by the fact that if she happens to die earlier than expected, then her daughter is the beneficiary of any money that hasn't been paid out. I find so many people come to us because they trust USA's representatives, and I've seen this story play out many times with other members. I've been very honored to assist both Mr. and Mrs. K, and she's been very pleased that she's now got a go-to person at USAA.
Wow, thank you for sharing, Dale. It's a great example of bringing our mission to life, and thank you for protecting our members. All right, to get us started, everyone, we are going to do a poll question today. So to keep things interactive, you will see on Zoom this popping up for you to input your answers. So here we go. Which of the following is a common use for an annuity? Is it to grow your retirement savings, to provide guaranteed income for life for you or your loved ones, to protect your nest egg from market downturns, or all of the above? All right, we're seeing the responses come in here. A little bit of everything, majority there on the all of the above. All right, let's wrap up the poll here and see what we have. All of the above. Common answer and multiple choice. All right, let's keep things moving. April, over to you.
All right. As you can see from our poll question, annuities can be used to achieve a variety of different retirement goals. That's one of the reasons that annuity sales are at a record high, not just at USAA, but across the entire industry. As the chart shows, their popularity has surged in recent years, from total sales growing from $219 billion in 2020 up to $385 billion in 2023. That's a 76% increase in just 4 years. One of the factors contributing to a record annuity sales is that life expectancy is increasing, and one of the key features of an annuity is providing income that you can't outlive. According to 2021 data from the Social Security Administration, for 10 couples, all at age 65, there is a 60% chance that one will live to age 90 and a 10% chance that one will live to age 100. If 65 is your retirement age, then that means that there is a high likelihood that your retirement could last 25 years or more. From my own personal story, my great-grandfather lived to 105. A 25-plus year retirement can be a double-edged sword. If you are prepared, then you can have the freedom to enjoy the phase of life to the fullest. However, a long retirement can also be a big concern because you need to make sure that your nest egg will last. A recent headlines show outliving your money is one of the greatest fears for most retirees. A CNBC headline states that retirees' biggest fear is outliving their assets. An article from Invest News states that most U.S. adults fear outliving their money more than death. And a Kiplinger shares that most Americans expect to outlive their money in retirement. While this can be daunting, thankfully, there are solutions that can help solve this problem. Annuities are only a few financial instruments that can provide guaranteed income that you can outlive. One of the others is employer pensions. However, these are becoming less and less common. Employers' pensions are also called defined benefit plans, which includes military retirement pensions that many of our members receive. As you can see from the light blue line in the chart, their popularity was the highest in the 70s and 80s, but slowly and steadily declined. Pensions have been given way to defined contribution plans like 401ks. As you can see from the dark blue line in the chart, defined contribution plans are much more common than pensions now. 401ks can be a very effective tool for growing your retirement savings. However, when you get closer to retirement and then transition to retirement, you might want to add other solutions to help protect your nest egg from market volatility or convert it into a guaranteed income that you can outlive. For those that don't have guaranteed income from an employer pension, an annuity can be an effective alternative.
Thank you, April. Now that we've reviewed some of the retirement trends that are contributing to the popularity of annuities, let's take a look at some common themes among annuity owners. There's plenty of research that shows that annuity owners enjoy their retirement more. First, annuity owners are more confident about retirement. In fact, 78% of annuity owners are confident that their retirement savings will last the rest of their lives, compared to 61% of non-annuity owners. This data confirms that annuities can help solve the fear of outliving retirement savings. Second, annuity owners are happier in retirement. 75% are very or at least somewhat satisfied with their retirement, compared to 71% of non-owners. Annuities can help you enjoy retirement more by not only helping to ensure you don't run out of money, but also making sure that you spend your money. Sometimes the fear of outliving your savings can lead to underspending. Annuities can help alleviate this fear by providing income that you have confidence will last. One of the most common questions we get is, if annuities are so great, then why do they get such a bad rep? That's a fair question, and there are folks in the financial industry who aren't huge fans of annuities. Here's our take on why. Annuities come in all different sizes and shapes. They can range from simple to complex, and they can range from having low fees or no fees to having high fees. There are certainly annuities out there that are very complex and do have high fees. They can be sold by pushy sales reps or advisors, and they can have complicated features. Some of these annuities are sold by companies that you might have concerns with about whether or not they'll still be around in 25 years. These are the types of annuities that tend to give the product a bad name. Other annuities are simple and have low fees or no fees. In fact, Social Security is an annuity. It's probably the easiest way to understand how annuities can be simple and have low or no fees. Employer pensions are another type of annuity that falls into this category. And this is where USAA annuities live. We intentionally try to keep our annuities as simple as possible. All of our annuities have no fees, and none of our USAA specialists that sell annuities are paid on any sort of a commission. We offer simple products and try to match them up with your individual retirement goals. Not all annuities are bad, but if you do, but you do need to do your homework before you buy one. Make sure that you understand how it works. Ask about fees and commissions, and make sure that you've got confidence in the financial strength and the longevity of the company that you're buying from.
Thank you, Dale. Okay, now that we understand a little bit more about retirement trends, characteristics of annuity owners, and why annuities get a bad rep, let's take a step back and talk about what is an annuity. We created a short video to help.
There's a lot to consider when it comes to retirement planning. You might ask questions like, how can I protect my hard-earned retirement savings from market fluctuations? How can I cover basic expenses without a regular paycheck? Will I run out of money if I live a long time? If you're looking for some peace of mind in retirement, an annuity could be a great option. So what's an annuity? It's an insurance product that helps protect you against the risk of outliving your money. Here's how it works. When you buy an annuity, you enter a contract with an insurer. You give them money, In exchange, they promise to give the money back to you plus interest at a later date or in the form of a reliable income stream. Annuities come in two main forms, deferred and immediate. Deferred annuities are great long-term savings options. They allow you to grow money tax-deferred with the option to turn into income later. Your money will either grow at a fixed rate or a market-based rate, depending on the annuity you choose. When it comes time to retire, you can take the money out in a lump sum or start receiving scheduled payouts. Immediate annuities, sometimes called income annuities, work best if you're close to retirement. They let you quickly turn some of your savings into a reliable income stream. When you buy an immediate annuity, you open with a lump sum and start receiving payouts shortly after. You can choose to get guaranteed payouts for the rest of your life, a set number of years, or both. You can also add beneficiaries to your contract. That way, you can rest easy knowing your family will be taken care of. Ready to find out if an annuity is right for you? Schedule a call with one of our retirement income specialists.
Now that we understand what an annuity is, let's also talk about what an annuity is not. An annuity is not a bank product. Although some type of annuities are compared with CDs, annuities are insurance products and not bank products. An annuity is not an investment. Some annuities earn interest based on market performance, and annuities can also be funded by transferring money from an investment product. However, annuities are insurance products, not investments. One common question about annuities is if they can help you save for retirement. Yes, they can. In the poll question at the beginning of the webinar, we learned that annuities can help achieve a variety of different retirement goals. Let's see how they can help with the saving for retirement phase.
Thank you, April. As the video showed, deferred annuities can be a great long-term savings option. While there are several types of deferred annuities, USAA focuses on fixed deferred annuities. With this type of annuity, there is no risk of loss to your principal. That means that even if the market has a downturn, your retirement savings will not be impacted. Deferred annuities also offer tax-deferred growth. That means that you can keep more of the interest you earn and grow your money faster by delaying the tax impact. You'll have to pay taxes when you withdraw the money, but that could be at a reduced rate if you're living in retirement and you've transitioned into a different tax bracket. Tax-deferred growth can be a powerful benefit to help you grow your retirement savings, and it's something that you don't get from products like CDs. Finally, deferred annuities offer built-in options for guaranteed income. That means that after your contract is at maturity, it's easy to take your deferred annuity and turn it into retirement income. This process is called annuitization. It's certainly not required, but it's a simple process for those that choose to do so. At USAA, we have two different types of deferred annuities. The first offered fixed rates that are guaranteed, which is our fixed guaranteed growth or FGG annuity. You can choose a 3, 5, or 10-year term, and rates may vary slightly depending on which one you choose. The minimum on the 3-year is $50,000, and the minimum on the 5 and 10-year is $20,000. With an FGG, you'll know exactly how much you're going to earn. The second type of deferred annuity we offer is called our fixed indexed annuity, or FIA. It has a market-based rate with performance based on the S&P 500, and there's a cap on how much you can earn, called a cap rate, in exchange for a guarantee that you won't lose money. Our FIA has a 7-year term with a $100,000 minimum. With an FIA, you can have confidence that your savings are protected even in a market downturn. And you'll have the opportunity to earn more than a fixed rate annuity would, but your rate can vary, so it'll be based on the S&P 500 performance.
Thank you, Dale. Annuities are probably best understood for providing guaranteed income when you begin living in retirement. But how exactly do they work? Let's find out. When you stop working, your paycheck also stops, but not your bills. Social Security can help cover your expenses. Employer pensions can too, for those that still have one. And also immediate annuities. Immediate annuities are also called income annuities. They're designed to provide guaranteed income during retirement. The options to choose income for a set period of time, your lifetime, or both. Many annuity owners choose the lifetime option since annuities are one of only a few institutional instruments that provide guaranteed income that you cannot outlive. Immediate annuities can be set up to provide income for yourself and also to your spouse if you pass away. They can help provide your loved ones and give you a peace of mind that they'll be taken care of even after you're gone. Finally, immediate annuities can reduce the risk of taking withdrawals during market downturns. For example, if you have a retirement savings in a 401k, you could take regular withdrawals to provide yourself income during retirement. However, those savings would be exposed to investment risk, which means if the market drops, so would your retirement savings. When you convert your retirement savings into income through an annuity, that income is guaranteed no matter what the market does.
Thank you, April. At USAA, we have a single premium immediate annuity. With an immediate annuity, you'll start receiving income within 12 months. You can specify the payment frequency as monthly, quarterly, semi-annually, or annually, and you can choose whether or not you want it to cover just your lifetime, or your lifetime in a certain number of years, or just a certain number of years. We also have an option to annually increase your income from 1% to 3%. It takes a minimum of $20,000 to get started. And funding sources can be something like a 401k, an IRA, an inheritance, a savings account, a maturing CD, or many other possibilities. USAA believes members should use a balanced approach when it comes to planning for living their best life in retirement. That includes having enough guaranteed or secure income to cover your essential expenses in retirement, keeping something allocated for growth, using an approach that's appropriate for your goals, your style, and your time horizon to help meet future needs. And finally, make sure that your plan's protected against some of the more common risks that come up in retirement, such as health concerns or the need for long-term care or emergencies, and the possibility of the death of a loved one. A balanced approach can help reduce retirement risk, keep your nest egg growing, and provide guaranteed income. In addition to annuities, USAA can also help you with things like Medicare or life insurance, long-term care, and other important services like estate planning and will preparation.
Awesome. Thank you, Dale. Now that we know more about annuities, let's take a look at some examples of who could benefit from owning one. First, we have the members in the retirement red zone. They're 5 to 10 years away from retirement and have worked hard to build up their retirement savings. A market downturn might have a significant impact on their retirement plan, and it might force them to have to work longer. A fixed deferred annuity can preserve their assets while also providing potential for growth to continue to building their nest egg. Depending on their risk tolerance, they may choose a guaranteed rate of return from a fixed rate annuity, or they may opt for more growth potential from a fixed indexed annuity. Next, many members already live in retirement are concerned about keeping up with inflation. In periods of high inflation, fixed rate annuities and CDs may not be able to keep up. While investing in the market can offer the potential for the higher returns, it also comes with the risk of losing money. For those not willing to take the risk, a fixed annuity could be a good solution. Finally, many members need income for the retirement paycheck even after they stop working. And an immediate annuity can help supplement Social Security to make sure fixed expenses are covered. It can also be used to pay for travel or a hobby by reducing the concern that you might be overspending on things that aren't necessities. Additionally, immediate annuities can help ensure that your spouse has enough money for the rest of their lives, even if you pass before them.
Wonderful. Thank you, Dale and April. All right, before we get to the Q&A, we have one last poll question. So, would you like to receive a no-cost consultation from a USAA retirement income specialist like Dale to see if an annuity is right for you? The Zoom feature for the poll question is up on your screen, so feel free to enter your preference. All right, looking to see that we have most responses captured. All right, let's move on to the Q&A. To start our Q&A, Dale, we'll start with you, sir. All right, many of our members want to know, how can I fund an annuity?
So annuities can be funded several different ways. They can be funded with IRA style money where it's never been taxed before. That also includes other employer plans like a 401k or a 403b. And they could also be funded with non-IRA money. That means that money from a savings account or a CD or something like that could be brought over from your bank or our bank to put into an annuity.
Perfect. Thank you for that. All right, April, the next one we're seeing here. What happens to my annuity if I die?
Oh, great question. So annuities have a unique feature. They have listed beneficiaries. So if something were to happen, it would be passed down to your beneficiary. It may be a little bit different depending on if you have an income annuity that maybe has a joint survivorship, if you have a joint life is what we call it, and that would just continue on to your joint spouse.
Okay, great. All right. Third question here. We'll go back to you, Dale. How is an annuity taxed?
Thanks. Everybody wants to know the answer to this question. If it is an IRA style annuity that has either come from an IRA or some sort of an employer plan, then it is fully taxable. That means that it's taxed at your ordinary income tax rate. For any other type of annuity, like a non-IRA annuity, you're only taxed on the amount of money that you have earned, and you're not taxed on this money until you actually take the money out and do something different with it, like spend it or put it into another type of investment. So annuities are tax deferred until you actually pull the money out and use it.
Great. Thank you for that, Dale. All right, April, we're coming back to you. So for our fourth question, do annuity payments count as RMDs or required minimum distributions?
Great question again. So let me clarify this one. So annuity payments would be coming from an income annuity. So those income generating ones we talked about earlier. So those payments are actually taken out of the RMD calculation.
Okay, interesting. Thank you for that. All right, Dale, we'll come back to you for our last question here. How much do I need to open an annuity?
So there are several different tiers. We can open up a 5-year or a 10-year fixed annuity with as little as $20,000. Our 3-year fixed annuity requires $50,000, and our fixed indexed annuity requires $100,000, as well as our income annuities. That also, no, forgive me. The income annuity also requires $20,000.
Great. Thank you so much. All right, Mary, we will transition back to you for closing us out.
We recognize everyone's situation is unique, and we really want to equip you with the information and tools to help you evaluate your own retirement plan. Our team is here to help you with all of the factors that go into your plan, whether you're wherever you are on your retirement journey. If you would like to speak to one of our retirement income specialists, you can give us a call on the number that's shown on your screen. Or if you prefer, you can schedule a call at a time that's convenient for you by scanning the QR code. We have teammates that are standing by today, ready for your calls. If you'd like to talk to us today, we'll be here until 8 p.m. Central. We also encourage you to go to our website as well and schedule a call with one of our specialists. If you want to learn more about annuities and retirement income planning, visit our website at usaa.com/retirement. And there you can find materials to help you prepare for your call to develop your own retirement income strategy. So as I mentioned, we have a lot and a variety of resources available to you. Let me give you an idea of where you can find some of those right now. If you haven't already done so, you can download the webinar slides using the Resources tab in your Zoom toolbar. The slides will provide you with clickable links for all of the resources listed here, including a link to schedule a call with a retirement income specialist, a registration link for our next USAA webinar, Working Past 65, Your Health, Your Wealth, and Your Life, links to 2 previously recorded USAA webinars that you might find valuable, One is Stress Less, Retire More, How to Increase Peace of Mind During Turbulent Times. Who doesn't want that? That webinar takes a deep dive into all of the ways that annuities can reduce investment risk, including inflation and market downturns. Another webinar is our Fixed Indexed Annuities webinar, Grow Your Retirement Savings Worry-Free. This webinar discusses fixed income annuities in great detail. Finally, we have links to 3 USAA advice articles that will help reinforce some of the topics we covered here today. And you can read each one of them in 3 to 5 minutes. Thank you for spending some time with us today to learn more about annuities and hopefully increase your retirement confidence. We hope you enjoyed this presentation. Thank you for trusting USAA.